the chilly but reasonable town of Auckland to the beautiful sunny beach side town of Brighton and Hove Albion. The home of the mighty Seagulls. Ash, trading data. What's the data this week? What's the key data we're looking at?
Well, so yeah, let's bring it up. I was just browsing through this earlier on, and straight away it's nice and easy to see where the red blocks are, which really indicate extremities for us. And yeah, we've got the pound here showing red block of index at 3 years at 0%, showing selling pressure. Index at a year and a half, 0%, showing selling pressure on a nearer term. An index of 6 months showing 0%, so very, very near term, it's showing selling pressure. We do see the same with the Canadian dollar. The reason I'm going to focus on the pound is because when we look at the longs versus the short, and it's very, very slight, but you can see that the longs here have reduced their position by 5%, so negative 5% on the longs, and the shorts have increased their position by 1%. So small margins, but when you look at the Canadian dollar in comparison, the longs have actually increased their position by 4%, and they've also increased their position by 2%. So really the spread is more positive for the Canadian dollar than it is for the British pound. So let's focus on the pound and open up the chart. And what's interesting here is the firstly the price of where the pound is in comparison to the dollar. Back in 2018, so around about mid-2018, you can see here's the January 2018 high. That ended up being a double top just a few weeks later at around about in April. And now we're seeing ourselves, we did see that high in 2021 in February, and really we're back there now. So it's an important level. That's the first really notable thing, that price is at a potential inflection point here. And then when we go down, we'll look at the index here. Let's not worry about the long and the shorts for right now, but let's just focus on the index. And if we just do a very quick analysis on what tends to happen when the index is down here at 0, and we'll go back and just have a look at a few of them here. Here's another example here, and the price dropped. Here's another example here, and the price went sideways, but you can see that it was quite weak. Now here's another example here as well, and the price dropped. So far it's kind of giving us the idea that this is a pretty good gauge of what's coming for this particular currency. Again here, the index was at 0 and the price dropped very, very aggressively. We can see it didn't quite touch 0 here, but price did drop. And you can go back and just have a look at all of these. Very close to 0 here, the price drops. On 0 here, and here the price climbs a little bit, but then eventually the price drops. Now this is important to note because we need to always remember that the COT data is not a timing mechanism. It is just telling us the overall sentiment that the commercials are putting on a particular currency. Where do they see the risk? Now they will hedge their positions wherever they see the risk. And what they're telling us at this particular point is that they see the risk on the pound to the downside more than they do to the upside. So not that they are saying that the market will come down, but they're saying that's where they are more concerned. They're more concerned about the downside move than the move to the upside. And when you start to kind of put together a picture of where we are in the trend, this is often a very, very strong signal of what's about to happen. Now let's also focus on the seasonality with a pound and see what that is telling us. Is it telling us that we are in a seasonal short, which would back up what the COT data is telling us? And we're just getting into June here, so this would be the June historical seasonal pattern. And if we just take an overview, I'm not really interested in the peaks and troughs. I'm just interested in where we are to where we may get to. Is the low of the particular precise point that we're in now lower than where we are now, or is it higher? And you can see here that it is lower. Now this weighted average does actually show a lot more of an extreme. So looks like we're looking to around about July before we see some seasonal bias in the pound to the upside. So COT data is suggesting extreme selling. the seasonality is suggesting that we do have the green light to go on that extreme selling. So the last thing that I would want really is something that would drive prices lower. Now, what's happened right throughout the world is that we've seen central banks getting involved and effectively adding much more liquidity into their system. And what we need to then do is say, okay, is the pound likely to be the first to take that liquidity out of the system and potentially raise interest rates? Is one tool they could use. Could there be some tapering on the bond buying? That's another tool they can use. There's a number of tools. Will they use a tool which is more hawkish, which the words and term hawkish would relate to some kind of tightening, or would it be more dovish, where it's more expansive and more accommodative? So far, we haven't really heard any government specifically saying, yes, we've had New Zealand saying that they may do it next year. I think Canada banded that around as well. But really what we're looking for is, who's going to start talking about, who's going to start talking in a more hawkish tone. And then we could use the pound maybe as our pair to trade that particular currency against. So we go pound short versus the currency that might start talking a more hawkish tone. The data is pretty good across the board. So right now there's a lot of confluence really between many economies, and it's making it very difficult to kind of get some separation of which economy will be the one that is likely to do that first. And it's also very difficult because so many of them have got so much debt. It's very, very hard for them to taper. And that would lead us to maybe something like the Swissy, which is in nowhere near the same amount of debt as many of the other currencies. So pound short is the big takeaway. Picking the correct currency is going to be the challenge really in the coming weeks.
Cheers, Ash. Thank you for that. So we are looking for pound short as we head into June. We've got cotton favour that and seasonality favour that. Looks a good trade if you can find the right technical setup.